Alibaba just released a new large language model that outperforms DeepSeek, and the stock jumped by 7%, taking the company's market value to $222 billion US. Shares are now up 31% over the past year. Chinese tech giant Alibaba poses a number of risks for investors. The company's variable interest entity structure means that foreign buyers get a derivative of the company and not direct ownership. The setup carries too much legal risk for some investors. Meanwhile, geopolitical tensions, a heavy-handed government and economic weakness have all put pressure on the stock, which is still down 70% from its 2020 high. And to top things off, the business of Alibaba has also underperformed. Revenue growth has collapsed in recent years to single digits, and free cash flow margins are barely a third of what they used to be. Such weak performance has caused even hardened China bulls to throw in the towel. But despite all of the negatives, there are some reasons why Alibaba might still be worth a look. The first is valuation. With $137 billion of revenues over the past 12 months, $12 billion of net income and $14.8 billion of free cash flow, the company is cheap at 1.5 times revenue, 18 times earnings and 14 times free cash flow. Crucially, that valuation doesn't tell the whole story. According to filings, Alibaba also has $85 billion of investments on its balance sheet, which includes a mixture of public and private businesses. Include those investments and the company's enterprise value drops to $114 billion, which means valuation drops below 8 times free cash flow. Such a valuation would make sense if Alibaba had declining sales, but that doesn't appear to be the case. Total revenues are up 5% over the past 12 months, while Alibaba's cloud division is doing much better. Cloud revenues advanced 7% in the most recent quarter, while the company said that AI-related revenue grew at triple digits. And it's the AI segment that is crucial to investors right now. If Alibaba's new AI model is as good as it seems, the company's cloud and AI revenue should have plenty more growth left in the tank. And if that's the case, Alibaba's valuation starts to look attractive. It would only take a small increase in the valuation multiple to produce strong returns in the stock. As mentioned before, an investment in Alibaba is not without risk. Economic stress and diplomatic tensions could still have a negative impact on Alibaba's businesses. A political fallout could lead to a delisting or even issues around the company's VIE structure. But right now, investors are starting to look at Alibaba again, and that should be good news